Welcome back. Well, how could the Syrian crisis and heightened tensions between Russia and the United States impact the market and investor sentiment? Joining me now with his analysis on the investment climate post the Syria strikes is Robert Janson, Chief Investment Officer at Westcourt Capital Corporation. Robert, always great to have you on the program.
Thank you.
So, what's your takeaway on this? Last half hour, we've been really having a debate here. Was this significant or not? Was it material? Or is this just, a president moved by emotion who makes a decision late last week? The markets certainly have had really no reaction.
I think it's actually quite serious. I think we've seen, obviously, a period of calm with the Obama administration for 8 years where there was a pulling back, a retrenchment from Afghanistan. He was lighter on Russia. He was lighter on Syria. And now we've got a stance, obviously, with Trump that is a lot more hardline, whether it be the Syrian/Russia crisis and or the North Korean/Chinese crisis. And obviously, these are big players in the world. So although there is a certain level of calm right now, I'm a little bit worried that things could get a little bit more volatile soon, for sure.
Yeah. And of those different pressure points out there, Russia, China, North Korea, I mean, which do you think could potentially have the biggest impact on investor sentiment in the markets?
I think they're both equally important in their own right. I mean, as we speak right now, there are 2 aircraft carriers on the way to the Korean the Korean Peninsula. That's very unsettling. But also, as well, I mean, the rhetoric on the campaign trail from Trump was that he was going to be able to sort of do a deal with Putin and the Russian administration, and I think that's lost right now. With Tillerson heading there tomorrow, I think it'll make for very, very difficult talks. And the Syrian crisis is one, beyond it being a humanitarian disaster, is one that has obviously now been pushed to the forefront. So again, Trump was very critical of Obama during his 8 years, but we might be at the brink of obviously a war or in some capacity, either on one or both fronts.
Mm-hmm. Talking to investors, what reaction are you getting to the so-called Trump bump? Because, there were a lot of baked-in expectations here, big tax cuts. Yep. Trade liberalization. And now it seems like what happens to a lot of administrations, you get caught up in foreign policy, you get caught up in military action. Does this mean a further distraction for the things that the market was hoping that Trump would deliver on?
I think it definitely does. I mean, unfortunately, those that were skeptical missed sort of a rally in the American markets of 10% over the past 3 or 4 months. But I think the word that you used was expectations. And so if you underscore that and you look at sort of Trump's 10 major campaign promises, he has not delivered on those promises right now. So this expectation was that, there'd be the repeal and replace in healthcare, that the tax reform would come through, that he would be able to push his agenda through quite easily, and that's simply not the case right now. And I think he's finding it a lot more difficult to lead than he originally thought on the campaign trail.
Yeah. When do you think that could factor into actual market behavior and investor sentiment? Because right now, again, it seems like a holding pattern. It seems like since these strikes and even before, the other big indices have kind of gone flat.
Well, I think that if he couldn't get the healthcare agenda through, I think it will be even more difficult with regards to taxation. If one can believe the Republicans and Democrats are both open to obviously providing some sort of healthcare for Americans, it's definitely much more polarized on the tax front. And so to push that through is going to be, 10 times more difficult. And when you take that into account, I think a lot of the Trump bump or the Trump rally had to do with the drop in taxation, and that was both on a corporate from going from 35 to 15%, and on the personal tax rate of the highest being 39 to 33. And so if those can't be pushed through, it's another falter with regards to the confidence that is following, this Trump agenda, and it is sputtering. And so whether there is calm in the market right now, I think it's obviously we're very skeptical with regards to that calm continuing and then markets continuing to grow over 17.
So if that's your thesis, what is the investment strategy that you put against it?
Well, I mean, obviously, as you know, Westcourt, we certainly encourage our clients to use a lot more of alternative asset classes, and so non-correlated asset classes, whether that be private equity or private debt, real estate debt or equity, hedge funds, et cetera. And that's really to counter, obviously, the volatilities in the public market. With rising interest rates, that's going to add serious difficulties into a fixed income portfolio, and staying long equities, it's going to be a bumpy ride. But one should also suggest that if I was investing, obviously, for the next 20 or 30 years, seeing those volatilities in the equity markets is something normal, and accepting them and investing for that long-term period is advisable and certainly not speculating.
And just finally, what about geopolitical risk? Is there any way to kind of insulate a strategy or portfolio and to execute a strategy that mitigates, again, some of the roughness that we might see in terms of investor performance out of these big questions that lie out there?
It is scary, but simply an example would be using a private apartment REIT. A private apartment REIT here in Canada that has 6,000 doors. Obviously, the performance of that private apartment REIT does not have a lot to do with strife in Syria or potentially North Korea. And so it's using elements and using asset classes in one's portfolio that allows the portfolio to insulate itself against these sorts of big questions that obviously we're going to be asking and finding out obviously in the near future.
Robert, always great to have you on the
Thank you.
program. Let's do it again soon.
Thank you.